Hi guys, welcome to another video. So today is June 14th. So what is the day today? It's not my birthday, it's not your birthday, but it's pretty much an important day today. It's Fed decision day. So whether or not the interest rate will be increased is decided by Yellen and the team today, okay? So now let's talk about what is expectation, anticipation of interest rate going up is 100%. That Fed will be raising their interest rate is 100%. So who gets to decide the expectation? Who gets to decide the anticipation, the expected value, the prediction? Who gets to decide that, right? So let's talk about what is this number come from, and how do we use it, and how should we prepare for the changes in coming days after the Fed decision, all right? So there one thing about the interest rate anticipation, just one thing, okay? And then there are two things that we should prepare after each time the Fed decision make a decision. So the most recent one is today. The second one is pretty close. It's July 26th, in which I will be in Toronto. So I'll update you guys when I'll be there. Okay. So let us take care of tonight first. Okay. First of all, what is an interest rate prediction? Who gets to decide the prediction, right? After all, so the prediction is something like that. This is we call the U.S. interest rate futures contract. So you see, it's the market, how they anticipate, how the general market, what they're guessing and expecting, using some kind of mix of feelings, mix of psychology, and mix of market data, economy data that US provide, right? So we can do trade using the trade with the future contracts that, I think that the interest rate will be a hike or a cut, and then we will trade off the contract. So there will be a price and an expectation and a probability, okay? So that's market-wise, okay? So be careful that if it's about US, then it is pretty efficient, meaning that many people and institutions really have an expectation. So when you average out, it's pretty accurate, okay? So if you try to guess Hong Kong interest rate hike, is pretty off, okay? It will be more off because no one cares Hong Kong as much as like United States, or maybe China is better than Hong Kong, but it's less important or less accurate than US, okay? So this is based on interest rate future contracts, okay? So this is the value. So as this is United States, so it is pretty accurate. So this is the first story where the number comes from, okay? So and then there are two things that we should prepare, because if in economy, when we are studying finance or economy, they teach us always. So if the probability of a hike is 100%, as it says here, then that means that the US dollar must go up. It's always wrong. For the past few times, it's always wrong. Why? Because in finance, in MBA and DBA, they don't teach you market anticipation. They just say it, right? So this is how I profit and how I defend and how I protect my portfolio. When it comes to time, we really have to take into account the anticipation. That's pretty a big deal, right? So the second part, let's understand how we should look at the data, okay? So this is a Bloomberg machine, which I have to pay them $2,000 US dollar every month. So this is my dream, owning a machine like that. So basically you won't be having that machine like a personal computer. It won't happen. So you can go to universities, colleges, maybe you get access of that, or you can just type US interest rate forecast, okay? So as I said, investing, trading economics.com is really good. Tradingeconomics.com, you can find it. Trading economics US interest rate. You can type forecast, or you can click to forecast, okay? Trading economics in Fed rate or forecast is the third link, okay? So you see the forecast, right? Okay, so it's more of a general trend, but you get a sense of the direction of where it's going. Okay, so if you get the information like that, how should you read that? So This is the date of FOMC meeting, right? Fed rate decision meeting, the date. Okay, so this is probability of hike. So prob is probability. Well, how much of a chance it will go up, okay, the interest rate, and how much of a chance will cut the interest rate, okay? It's 0, right? So right now, everyone knows that today, Janet Yellen will say that the US interest rate will be going up, okay? That's for sure, okay? But you see, 1 to 1.25, what does it mean? So now the base point is 0.75 to 1. So that means it's raising the interest rate for 25 basis point, okay? So this is raising by, we so-call in the market, one time. We hike of one scale, okay? So the probability of that is 91.4. So majority of this 100% saying that Janet Yellen, yes, she would say that let's make the interest rate go up. But most of them, majority of them saying that it will only go up one scale, for one scale, okay? So raising for 2 times, meaning it will raise for 50 basis point, is only 8.6%. So this is how it goes. So when you go down, the next one is July 26, right? So it's still 100%, right? That's not, it means, so meaning that even though Janet Yellen tonight, she would say that, oh, let's keep the interest rate the same. If that's the case, you would say that, oh, next time it's still 100% of a hike, but Janet Yellen will have extra 1.2% of a chance that she will say that let's raise interest rate for 50 basis points. If she also doesn't raise the interest rate for in July, in September, or even to the December, it's almost 40% that you are not going to raise interest rate now. By Christmas time, you will have 40% of raising the interest rate altogether for 50 basis point, and 0.8% for raising 1%, one whole percent, okay? So this is the case. So you see, it's dropping, right? It's dropping, right? Until next year, August, right? Wrong, it's not dropping. It's all going towards raising to even up to 2% to even 2.25%. It's pretty surreal. It's not gonna happen. So today is how you look at the data, okay? So 2 things we have to understand, okay? So one, for longer term, for your longer investment. The second preparation is for short term, meaning that what we'll be hearing from the news, what you'll be reading on the newspaper, and what your friends are talking about is short term. It's not important, but urgent. So longer term is really important, but it's kind of not urgent, right? You understand what I mean? So now, if the interest rate, if Janet Yellen is going to raise the interest rate, then for longer term, as I said many times, hopefully you didn't sell your house, right? For the longest time of the time, I said, if for long term, United States is the only sole country that is so strong that they have to raise the interest rate, then the economy is really good. In the past video, I made a video showing that 60 years of the United States history, 100% of the time, whenever US is experiencing interest rate hike, 100% of the time, United States, the indexes, the 4 big indices and housing market will hit historic high again and again. So now is a proof that at least it's 100%, right? We really have to take into account like that, okay? 100% of the time, it will hit historic high again. So meaning that it's another proof that the housing market and stock markets will hit historic high again. I'm not saying that it won't adjust back. I'm not saying that the stock market won't adjust and housing market won't adjust. But after adjustment, it will be temporary. And ultimately, it will hit historic high again and again until the interest rate is going up to a level that we leverage too much, to a level that me, the country, and the whole world cannot pay up the debts. That's a bubble, okay? So right now, I admit that there's a bubble, but a recession, meaning that the bubble is so big that we can't afford, okay? So that's a bubble, okay? That is really hard to get. So everyone, regardless of how high the interest rate is, everyone just gamble and speculate and just hot money flowing around. And then all together, suddenly, we can pay up the debts, okay? That is a really coincident and really really hard of a chance that we can meet that thing. Okay, so recession is not as like we say every day. There's no recession every day. It's like what 5 to 10 years there's one recession every 5 to 10 years. Okay, so for longer term is for you to be really sure that United States is really strong, that they have to raise the interest rate, right? The second thing is short term. Okay, short term is when you get to raise the interest rate, or whenever people are expecting an interest rate hike, and then the news, the people from YouTube, not me, hopefully, people all around the world, throughout my 20 years of investment experience, people will, in short term, is short-sighted, right? They will immediately say that next month, your debts, your business debts, and your mortgage will be higher, so you have to pay more. We're doomed, okay? We're dead. It's recession. That's so wrong. I would say it's true. For next month, our expenses, our costs will be higher. That's true. But that's recession. That's not even close. That's two different things, okay? So you have to prepare that in short term, people will come all from out of nowhere saying that the market will adjust and you guys will have a hard time. But think about that. Which country, even how bad they are, which government will suddenly raise the Fed rates without calculating if you can afford the mortgage, right? What about that? What about they're smart enough to calculate that you have too much cash, people have too much raise in the salary, that majority of us will speculate and the hot money flow into food and housing market. So really have to raise the interest rate for a little bit, so to push the growth for a bit longer, to last a bit longer, okay? Think about that. During the past 3 years, right? The interest rate has been has went up for like 0.75 or 1%, right? So your salary, do the general average salary just gone up for 1%? It should be a lot more than 1%, right? So think about that. I urge you to think about that. For longer term, it's for health-wise, for the sake of health of the whole economy. And it's a proof that we are healthy, so that United States is going to experience an interest rate hike. In the short term, yes, compared to last month, yeah, it's going to be more expensive and we get to pay more, right? But compared to like 5 years ago, I'm almost getting fired, or we are almost getting cut in our salaries, right? That's all different stories. And even that, oh, I'm really disciplined, right? If I have money, I just save it. I don't spend it, right? Just you. It's not the whole country, okay? So they have the math behind. So in the short run, prepare for all kind of short-term news that are urgent, but not that important. So if you miss that, it's not big of a deal. But if we misplace our thinking of interest rate, from mixing with long-term to short-term, then we will make a really bad and devastating decision, long-term decision. We'll do it wrong, okay? So, short-term in US dollar index, maybe you're going to invest in commodities or even forex. If you think euro and pounds are pretty cheap, you want to buy it, you really want to look at US dollar against the euro or pounds, okay? So, in the short term, I still warn you like that. Even though Janet Yellen is saying that, we'll raise the interest rate for one time, like 0.25 basis point, okay? So you expect school taught us that the US dollar will go up, right? So wrong, okay? Because the anticipation was already there. When she's just doing something that matches the anticipation, the US dollar will not go up. But even it will not go up, it may come back down. So be careful and prepare for the fall today. But the only thing that will make the US dollar go up, there are two things that Janet Yellen would do. Now, she will raise the interest rate for 50 basis points. So this is really pretty coming off guard, right? So the US dollar will go up, will go stronger against all currencies, okay? So the second thing is, okay, Janet Yellen is only raising the interest rate for 25 basis points, but at the end of the FOMC meetings, she will say something like that. Okay, even though we just raised the interest rate point for 25 basis points, but by July I'll raise it for 10 times. up to 4%, or it's really our expectation, right? Then US dollar will also go up only because of her speech, okay? That is something the school didn't teach us. You really have to learn, you really have to bump your head and fall down to learn, okay? I don't want you to do that, because I did that many times. I misheard of, mistrust some kind of news that our investment horizon were just different, right? People just talking for the sake of, they have some updates next week, okay? But us investing for our life is not for next week and then in and out, we just quit investing, right? Even houses or stock market, after all, it's just for our quality of life in the whole span of our life. So basically, hopefully you will have a better and more solid insight of what is interest rate anticipation, who did that, and how should we prepare before and after the Fed rate decision. Hopefully, if you have any comments, please show me in the comments, or show me something up with the big thumbs up, and also share the video to your friends. Please subscribe and hit the notification button if you will, and then also like my Facebook page. So before next time, let's see how it goes tonight. Okay, I'll see you Friday. All right, see you next time. Goodbye.